and welcome to this week's first edition of Targets in Focus. Joining me now is John Cairns, a currency strategist at Rand Merchant Bank, to discuss the US dollar against several other currencies. John, great to speak to you and great to have you back on Dukascopy TV. Now, judging by current market sentiment and the political and economical backdrop within Europe, we've still got decisions to be made on the Greek financing deal and EU budget negotiations. What's the next target for the euro-dollar in the short term? Do you think it's set to move higher? And what about looking further forward? What base case scenarios have you built your euro-dollar forecast on?
In our forecasting, we've been working with a fair value of 128, and we've been trading around that in the past few weeks. And if we look into 2013, while it's normal to expect some volatility, there doesn't seem any obvious direction one way or other going forward. So yes, we know there's been a lot of huge swings since the crisis, but it does look now that it's settling down. So we building in really just a flat euro-dollar going forward.
Moving on, let's talk about the current exchange rate of the US dollar versus the South African rand. Now, we've seen a severe drop in the local currency. Do you anticipate further rand weakness in the weeks and months ahead?
No, we expect a bit of a rand recovery in 2013. Certainly the rand has been oversold, a combination of domestic political pressure and a weakness in the balance of payments. The question to us really is how much the rand can come back when the balance of payments is so weak. But we do think foreigners will start purchasing our assets again. We have seen some signs of that in the past 2 weeks. So dollar rand to come back into the low 8 rand level, that seems possible. But with this balance payments problems that the country is now exhibiting, moves sub 8 on dollar rand probably seem unlikely.
Still on the discussion of South Africa, the economy faces many of the same challenges as other major central banks, with slowing economic growth, higher inflation and rising unemployment. Now, last week the South African Reserve Bank left the repurchase rate at 5%. Do you think the central bank will keep policy unchanged through most of 2013, or could we see another rate cut?
We see scope for a cut, but probably only later in the year. Inflation is heading upwards at the moment, and we expect it will push above that 6% level early next year. And in that environment, even with growth slowing down, the Reserve Bank's will have to be very cautious about cutting policy. It's only when inflation drops back below 6 later in the year do we look for scope for another cut. That would just be another 50 basis points rather than the start of another cutting cycle. So be one late cut in the cycle and nothing more.
Now, the Canadian dollar alongside the Australian dollar has been considered by the IMF to be granted official reserve currency status. What are your views on this?
Look, there's been a lot of talk over the past few years that central banks have been buying these currencies up anyway. Central banks are no different from any other investor, that they're looking for yield, and the commodity dollar block currencies offer this type of return. They also AAA rated economies, doing very well, so it's no surprise really that they get this formal recognition. It's a recognition of what has been happening anyway.
Finally, John, we've got a fair amount of data released this week which could affect the level of the Canadian dollar. Talk me through the overall trend in dollar CAD over the next 12 months.
Well, the commodity dollar block has been battling to push higher for some time now. So if you think of Aussie's got the clearest trend. Aussie dollar couldn't get through the 106 level. Now, fundamentals in Canada look a little bit better than Australia, but this whole block now is run very far, very fast. Unless you really believe in significant further upside in the commodity super cycle, then we expect this trade across that block to start to fade. So dollar CAD, Aussie dollar have been trading sideways for the past few months. That seems like the most likely trend going into 2013, and maybe eventually then these super currencies that have just been gaining year after year to start to reverse because they're clearly overvalued at present.
Thank you very much, John, for sharing your latest forecast with us. Now, still to come on Dukascopy TV, we have the latest edition of the Press Review, a look at the week ahead for financial markets, and also a look at US consumers and Black Friday in the US. For the moment though, viewers, goodbye.